Everybody's talking about the next housing bubble, the real estate crash, and the real estate market ultimately crashing in 2021. And obviously 2020's been one crazy year. You literally have millions of Americans in forbearance. You have millions of Americans facing a possible eviction crisis. The Fed is literally just printing money to stimulate the economy at this point. We're also looking at a potential mortgage crisis. Housing prices just continue to go up. Supply continues to go down. New builders aren't building nearly enough homes. You still have millions of Americans out of work, and it's not even 2021 yet. So in today's video, we're going to be breaking down whether or not the housing market is going to crash in 2021, what you can do to prepare, and what you should start doing immediately aside from smashing the like button for the YouTube algorithm. By the way, if you're brand new to my channel, my name is Austin Zaback, and typically on my channel, we're talking about real estate, finance, business, how to make money, save money, and invest your money. And yes, I'm heavily involved in the real estate industry. I own rental properties, I fix and flip, and I'm a real estate agent. So if you're a homeowner, if you're a real estate investor, a wholesaler, a fix and flipper, or you're on HGTV and you have your own show, then definitely make sure to stay till the end of the video. Now, I get a lot of comments on my videos, people message me on Instagram and pretty much all over talking about the 2008 housing market crash, and they're asking essentially if this upcoming housing market crash is gonna look anything like that one. But what I think we have to do for just a quick second is peel back the onion and look at what really happened in 2008. There was obviously a lot of reasons why the market crashed in 2008, a lot of variables, but one of the biggest reasons was the subprime mortgage crisis, which in a nutshell is just a lot of mortgages that are essentially high-risk borrowers. So there were a ton of people that were able to literally walk into the bank and get a mortgage on a house that they quite literally couldn't afford. So pretty much what happened in the early to mid 2000s is that high-risk mortgages became available from lenders who essentially funded mortgages by repackaging those mortgages into pools that were then sold to investors. So basically what happened was this caused a really big demand, and ultimately there wasn't enough supply to supply the demand, which caused the prices to actually go up. Then of course, that's when you had a lot of the big companies go ahead and shortly thereafter start filing for bankruptcy. Fannie Mae and Freddie Mac suffered massive losses, and then of course they were seized by the government in 2008. So then of course, in response to everything that was going on, they went ahead and they tightened up the lending requirements and made it a lot harder for high-risk borrowers to go ahead and get approved. So then that obviously sent the demand in a basic downward spiral, and then of course the foreclosures started to pick up along with that, and all of this really combined is what caused the 2008 housing market crash. So there were obviously some other variables, but I want to go ahead and keep it simple so we can go ahead and talk about the 2021 housing bubble and housing market crash. So in 2019, obviously, we had one of the strongest economies we've seen in an extremely long time, if not one of the strongest economies ever. The S&P 500 was up 28.9%, its biggest one-year gain since 2013 when it rallied 29.6%. The Fed went ahead and started to cut interest rates multiple times in 2019 to encourage people to go out to spend money and to buy homes. And finally, in 2019, the US home ownership rate literally skyrocketed. By April of 2019, 673,000 houses had been sold in the United States, which is about 12.4% more than the previous year. The Midwest literally had the highest rate of home ownership ever at 68.2%, followed by the South at 66.2%. There was literally a ton of talk in 2019 about a potential crash back then. Simultaneously, they were also predicting in 2020 that it would be the biggest year ever for millennials to buy first-time houses. They were saying millennials would account for 45% of mortgages in 2019. And keep in mind, this is all the while that home prices are literally skyrocketing, and at the same time, Americans are literally spending up to 50 or more than 50% in 2019 of all of the money they make on their home. And a lot of this continued right into 2020 until basically March rolled around, and then we know what happened after that. And of course, everybody panicked and the world essentially looked like it was coming to an end. Unemployment literally went through the roof to above 10 million people. By April of 2020, the unemployment was almost at 15%. And then of course, at that moment in time, everybody really expected the real estate market to pretty much crash along with the S&P 500, the stock market, the Dow Jones, and pretty much everything. But then something really interesting happened and the market took more of a V-shaped recovery. Because pretty much in the month of March and a little bit of April, the number of new listings that came on the market pretty much came to a halt. The number of overall home sales came to a halt. The stock market literally dropped by like 10,000 points. The Dow Jones literally went from almost 30,000 to below 20,000, which is a 10,000 point drop in one single month. So why is it that the stock market and the real estate market took such a V-shaped recovery, and are we in a bubble right now? And should we expect and go ahead and prepare for a 2021 crash? Because let me tell you, it has not slowed down. The Fed, Jerome Powell, everybody has essentially come out at this point and said that they're gonna go ahead and they're gonna keep pumping money into the economy to stimulate the economy. They're gonna keep interest rates low for the next several years. And ultimately, what is going to happen? Obviously, we had the CARES Act, we had a stimulus check. There's been rumors of another stimulus check. And at the end of the day, what are we really facing right now? Now, unemployment has definitely gone down, but we're seeing multiple states go back into lockdown, and we're really seeing a lot of crazy stuff. I mean, right now in the holiday season, it's typically the slowest time of the year for real estate, and this year it isn't slow at all. I'll give you an example. In my market, in the last 30 days, there was 9,400 houses that sold and only 6,300 listings on the market, which means that we literally have less than a 1 month supply. So demand is exceedingly high, supply is definitely low, obviously causing prices to continue to go up, with interest rates also at an all-time low, literally causes the bubble that we're in. Now, of course, some people are going to call it a bubble, other people are going to say that it's just going to continue to go, and other people think that the market is going to crash literally any minute. The list prices are soaring to double digits, okay? Actually, in the last week of November, that actually marked the 16th consecutive week of double-digit price appreciation. So let's just be real. Can we really keep going at the rate that we're going? But the reality of it is this: there's millions of people in forbearance, there's millions of Americans that haven't been able to pay their rent and are facing a possible massive eviction crisis. Unemployment is still at a fairly large number. One possible scenario is that V-shaped recovery I was talking about ends up looking more like a W due to another possible shutdown by the government. So you would essentially have what they call the double dip. So like the Dow Jones dropped about 10,000 points in March, and the real estate market for that month pretty much coming to a dead halt, then obviously taking the V-shaped recovery going straight back up, breaking a ton of records along the way, we could possibly see another dip forming that W. Now, the real estate market overall is caused by a number of different variables. You have things like interest rates, consumer spending, consumer confidence, supply, demand. You also have things like investor activity and the amount of people building new homes. So the Federal Reserve has obviously made it really clear that they're not going to be raising interest rates anytime soon, and that is obviously giving Americans the opportunity to go ahead and refinance into a lower interest rate. For me, one of the biggest things that I'm going to look at going into Q1 of 2021 is going to be the overall amount of foreclosures, and if we see a foreclosure spike, if we see an eviction spike, and then overall what ends up happening with the supply, and if more sellers actually decide that they want to go ahead and sell after the holiday season and after 21 as well, just completely over and in the rear view mirror. One of the biggest problems that I see is you still have 12.6 million people without a job in America. You have 3.6 million people that are in forbearance and can't pay their mortgage. Now, when we compare that to 2008, in 2008 you had about 11.1 million people that were jobless. The difference though is in 2008, if somebody couldn't pay their mortgage, they got foreclosed on. But because of the CARES Act in 2020, nobody's been foreclosed on and nobody's been evicted, which is one of the biggest reasons why I think going into 2021, we could have a big problem on our hands. In my opinion, one of the biggest factors that really affect housing prices is obviously supply and demand. And obviously supply has been extremely low in pretty much all of 2020, and demand has been extremely high because of the low interest rates primarily. So the biggest thing that I'm really going to be paying attention to is what is going to happen with the supply when we go into 2021. Because if supply goes ahead and it goes way up and demand doesn't go up with the supply, then obviously it's going to cause housing prices to go way down. And obviously that'll cause a lot of fear in the market, and people will get worried and they'll get anxious and they'll get stressed. And when that ends up happening, it causes what I like to call the snowball effect, which will cause prices to go down even more, demand to go down even more, supply to go up even more, and overall it'll just continue to go in a circle. Now, what could potentially happen is that by 2021, the overall economy gets significantly better, which means that the overall amount of people that are without a job actually goes down. And then what will happen is obviously the forbearance period is going to come to an end, but then people go ahead and they start making their payments, and the government just takes all of the missed payments that they didn't make during 2020 and just adds that onto the back of the loan, so they don't necessarily have to pay that up front, they'll just have to pay it over time, which in theory would prevent a ton of foreclosures happening all at once. There's obviously a ton of scenarios of how it could play out in 2021, one and what could ultimately happen with the real estate market, with the housing bubble, the mortgage crisis, and with really everything in general. And obviously nobody can predict the future, so everybody making YouTube videos talking about the real estate market crash, the housing bubble, the mortgage crash, the next stimulus check, or whatever the case is, at the end of the day, nobody actually knows what's gonna end up happening. What I can tell you for sure, and kind of a more optimistic way of looking at it, is that the real estate market really changes very slow and it changes over time. It isn't like the stock market. It isn't like a lot of the other sectors in the industry. If the real estate market were to go down or were to crash, ultimately this would take several months, if not several years, to fully feel the effect of it. This is something where people can really go ahead and they can take advantage of selling their home right now if they need to, while prices are at an all-time high. If you're in a bad situation and you can't make your payments, it might be worth considering selling your home at an all-time high and then going ahead and maybe just downsizing into a little bit smaller of a home where you can go ahead and afford to make those payments. There are really a lot of different ways that you can avoid getting foreclosed on and getting evicted, and ultimately I would just really highly recommend that you go ahead and just watch a lot more YouTube videos talking about maybe getting a side hustle, making a little bit more money, figuring out a way to make that payment, figuring out a way to go ahead and catch up on the payment with your potential landlord, and ultimately just going ahead and trying your very best at least to avoid a potential negative outcome. Now obviously you can only control your life, you can't control the world, you certainly can't control the economy, I definitely can't control any of that, and at the end of the day I would just really recommend that you stay optimistic and you do your very best to position yourself on the right side of things. Again, anxiety, stress, and all that stuff will never help at the end of the day, and so I just encourage you to figure out a way to look at it in a positive manner. Stay up to date on a very consistent basis, so if the market does start to go a different direction, you can make sure that you don't end up in a bad situation. I do, however, think that real estate investing is definitely something that you could get into right now if you're financially able to, due to the fact that the interest rates are at an all-time low, and at the end of the day, if you're buying and holding over a long enough period of time, historically speaking, even if the market were to go down temporarily, it is ultimately going to rebound over time because that is ultimately what it does. Remember, you can't lose as long as you don't sell in a down market. So if the market does start to go down, you either want to sell immediately so you're still technically selling at the high point, or you want to understand that you're going to have to hold it over a long enough period of time to not lose money. All of the people that you hear about that lost millions of dollars is because they sold in a down market. I personally am still buying real estate to rent out, to fix and flip, and ultimately, if I have to, I'll just hold on to them for the long haul. And that is kind of my investment strategy anyways. Definitely check out all of my links in the description down below. I'm doing a couple of giveaways. One of the giveaways I'm actually doing with one of my data companies where I get all of my distressed and off-market properties. All you gotta do is sign up there. There is a 7-day free trial. Again, I'll include the link down below. And I am giving a couple of people in a couple of weeks a year-long free membership. Also, if you haven't already, I would really appreciate it if you would check out my brand new podcast. Link down below. Definitely click on that, check that out. We interview cool people all around the world. We talk about life, business, money, finance, pretty much everything you need to know. Definitely consider subscribing. And I really appreciate you for watching the video. Let me know in the comments down below what you think the real estate market's gonna do in 2021.